Gents, there's a number of examples of the method triumphing over the emotional responses, and I want to just talk to you about Ethereum. Ethereum's another example in case. So we did a live stream. 2,000 people have seen it. It's actually not very many. Maybe my bad for lack of popularity. Who knows? But anyway, let's see what happened on Ethereum. This was the date that it was done, the 11th of November. The Bitcoin crash was completely confirmed on the 14th of November. Let's have a look at the insert on Ethereum.
Thanks for your patience, by the way. We took a while to get our tech sorted, and in the end we decided good old iPhone stream will go with that. Ethereum, is that a head and shoulders? Is that a neckline? We were looking for it. We scenario casted it. There was a draw when it was still in the falling wedge. I've been busy all weekend, and this is what it's done. It's fulfilled my scenario cast. That doesn't mean I'm smart. It just means I'm lucky. It was one potential course of action it could take. Did it bounce off the neckline? Yes, and it's currently hammering right now. My anticipation is maybe a weak rally and then the possibility of a spill for a target, but that's a big target.
My anticipation, a weak rally and possibly a spill for target, he said. Oh, of course he remembers all the ones he gets right. Of course he would. We don't get it all right, and that's not the impression I'm trying to give at all. What I am trying to say is method makes a whack of a difference. This is one that is accurate. So if we just take a run past the Ethereum chart, let's have a little look-see. There it is. That's the head and shoulder. Let's get into that time frame that we were looking at there. I think it'll be 30 minutes will be better for you. That right there is that head and shoulder. Let's reframe, bring him in. That is it right there. Weak rally. So it played and bounced. This is, I was talking around there, the 11th of November. You can see the date. Bounce. Weak rally was the call, and then break of the head and shoulders. Why were we interested in this? We were interested in this for a specific reason. And that reason was that we were already making our high 3 on the head of the head and shoulder, and we had already got, or were seeking, our final low 3 on an inverted HVF. And we identified that hammer. That was the 11th that we were talking about, and as it rolled. So amazingly here, what actually happened is we got an inverted fractal. We called for that weak rally. The weak rally is actually to the bulls seems a good thing. We're going up. That's all they care about. Are we going up? The manner in which, after a test of a key level of significance, this was our key level. Surprise, surprise, the $210 mark. We talk about the role of round numbers in technical analysis. Key level of significance, round number, and so it was. I also mentioned the descending. Let's give me the line, please. Give me a line, please. Give me a line. Give me the line. That was occurring. So you even got the warning that you'd pop for your little right shoulder here in your descending wedge. That's what they called wedges, Francis. Wake up. And so that was what happened, and we got him, and we got that bounce. So you got that dip. That actually gave us, on a fractal level, a low 1. A low 1. That gave us a high 1. That gave us a low 2. That gave us a high 2 there, and a final low 3 with funneling there, or maybe on the hammer. So what you've actually got here, and I'm going to change this into gray, is you've got a squeeze within a squeeze. And you see, well, this is what people don't understand. The game is about financial mathematics, not how many times you get it right. It's about financial mathematics. How low can you squeeze that risk in a logical point with many little edges in your favor? Many little edges in your favor. How tight can you squeeze that risk? And this is how tight. Low 1, high 1, low 2, high 2. And you know, you can watch a YouTube and think you can learn HVF method. I'm afraid you're going to be mistaken. What you're going to get is a couple of ideas about that which we might be doing, but you're never going to learn it, because you can be given this opportunity 100 times over. In the absence of community, in the absence of the detail of understanding what makes that an inverted HVF, why it is a primer, we call it a primer, in a much bigger pattern. And I will show you the bigger pattern all to the left. I'm just showing you the head and shoulders trade. The people who watched that YouTube clip don't know what they were given. They don't know the extent of value of what they were given for free. Why? And I'm not trying to be, oh, I'm Santa Claus, I gave them. I wouldn't have known how it would have panned out at all either. But I was giving a real potential opportunity. Why? Because we had inverted HVFs. I did a live stream. I was going to give you 3 or 4, 5 of some of our best ideas as a little glimpse of what goes on in our community. And you got given one. How many of you traded it? You see, none of you, because you don't know the value and you don't have the confidence, and nothing you're given for free really has that value. I can come back now retrospectively and say to you, you got given at the most conservative a 1:23 risk reward trade. Now I'm going to ask you, when last did you land real quick a 1:23 trade, which was totally emotionally comfortable, went immediately into profit, and largely every time you looked made you more money? When last? I don't know. Maybe regularly. Maybe you do it every day. I don't even do it every day. I can tell you. I'll be happy with doing it once a week. But it does happen, and we're always hunting and we're picking them. And we had a unique set of circumstances with crypto and the contraction. We've been waiting for this opportunity. So there they were. And people don't have the focus because they don't know the value of what they're doing. You see, in actual fact, on the 1:23, that's with a stop there. But actually, you could have been right there on your H3. I'm going to be generous and fatten that funnel slightly and say we'll take that hammer low and then the subsequent move up and the break only subsequent. So I've fattened it up a bit. I'm not going to create the tightest funnel of all. I'm going to say that is your entry short. Let's get that line and get him in. Let's get that entry short. Boom. That was him short on Ethereum. Now if you had a sell order on that green for go, I'm going to make him a little bit fatter so everyone can see him. If you had a sell order on that green for go and a stop at the high point, tick or two over at the sell point there, you would have been in an Ethereum trade that went abruptly and immediately into profit. Abruptly and immediately into profit, ran what we then had as our working H3. This is the thin one for the much bigger pattern, and that's the thin line. I've made these fat so you can spot them. And then went spill, 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 literally from 210, a shade under 210. You could have been short with your stop at, wait for it, 211. Let's call it 211.50. Let's say, here, have $1.50 of risk. What did you make on that $1.50 of risk? I'm going to take you back out and up the time frames, and you can see for yourself. This is what you were trading. Let's pull it through properly. You would have been in a head and shoulders on an H3 and L3 that had a primer inside squeeze of an inverted bigger HVF pattern. You would have had 3 patterns nestled within each other. The head and shoulders being the mini, the main inverted HVF being the primary pattern that I've drawn and shared in our community repeatedly. You could have had your risk reward so tight that you would have been in there, short there, and out on that target. And some will say, no freaking ways could you have done that. And I'm showing you right here, that's your entry on the pink line, and that was the target. And you'll say, oh, you've just drawn that now to meet that absolute low. Well, this is where it comes from, guys. H1 from L1. There you go. See that at the top? You see that at the low? I have to adjust it slightly, so let's do that. Boom. From our midpoint, which is in between our H3 and L3, which is there. That sits halfway between the red and the green, and you got out at the low. There you go. Small adjustment, in fact. Boom. I prefer it that way. Anything else is a bit too tight. That is your risk reward, guys. $1.50 at 209.75 to 210.50. We said we would be short from 210. Let's go have a look at that short again. We'll get the number for you. That risk reward is actually 60. You could have had 60 if you were watching. Now, we were doing the program, we were doing a lot of things. I didn't I took its cousin, EOS short and Bitcoin, and I didn't get this pattern within this pattern. I didn't have time to revisit things. We were on all things, but I shared it, and it was there to be taken. And some people were short on the Ethereum, and they done grand. And look how it fell. Look how it fell. Down, down, down she goes. Rally, down, down, down she goes. Let's have a look at that interim level, how it would have done for you. That actually includes, I'm not sure if I'm going to include, I'm going to do two, because that was the Bitfinex pump. It's slightly an exceptional event, but we'll grab it. It's not particularly relevant, and I'm going to go with a 3 there to there. Slightly non-standard, because I'm cutting out what was an exceptional event, and I think was probably a fabricated event. That's the one I suspect is the one, and I'll tell you why I say that, because it gave perfectly the point of rest on the way down, and that's typically what happens on interims. So you're talking about a trading method, guys, that if you properly learned how to do, that you won't be able to achieve just by watching YouTube. You'll get some ideas of what we're all about. But on your second interim, gave you the zone at which point you'd get pushback. Understanding grind line, you would have realized there's nothing to fear there. We're going to continue, and we're going to cover the big distance in an absolutely capitulative manner, and thereafter there'll be a bit of pushback and rally. And that has exactly what has happened on this trade. And by the by, if you thought, well, it's kind of a fluke. Yeah, you could have had a technical 60s to 1, but you got lucky. Well, trading patterns within patterns is our game. What the other technical analysts don't get is it's all about the volatility, the squeeze, the financial mathematics. You know what? If you were prepared to lose $100 on that, you come out with 6,000. If you were prepared to risk $1,000 on that, you come out with 60 grand, guys. There's no one getting you that kind of RRRs. Winning in trading is absolutely how much reward you can gain in how much risk. And you have to understand the manufacturer of this trade. There are 3 patterns, all of which have contributed to the squeeze. The macro one gives you the big target. The mini head and shoulders gives you your high 3, your low 3, and a key level of significance that you should observe that should break only by HVF method on a horizontal level, and was also the round number of 210. And the primer, taking you right back into that 30-minute segment, gives you the squeeze of all squeezes that allows you to get your risk down to ridiculous levels, guys. Ridiculously tight levels. And this is the financial mathematics of the game. That allows you to trade bigger for the same loss. If your loss is $500, $100, a unit of loss, you can trade it just like that. That inverted, if watched. And when you know that something, because people aren't running around, you can't go through every chart on the 5 and the 15-minute time frame. You've got to have top-down strategy, macro, super macro view, trend view, then your pattern view, then we go to the trigger time frame view. And guess what? We have an entire platform dedicated to setups that already do all of that. And look at these shorts all over the place. And if you're a crypto guy, I'm going to share this on crypto. Let's do the crypto setups. You can see all of these setups. Let's go to any of them. Let's choose. Let's go to Neo. It has been ages since I visited the Neo one. That's the chat in a WhatsApp functionality where we share charts. Let's go to the setup itself and see what it's done. There you will see trend view. You may recall I said, hey guys, Neos could get a 2/3 of a haircut. I seriously think that there's a chance that this thing could go down, 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 and it'll be 1/3 of what it is today. You can subscribe so you get notifications as we change, as new things go in. You click on the macro, you can see it. There was the big pattern. By the way, it was up, up, up at 36, and we said, guys, it's going to lose 2/3. It's going to trade 11 or 12 to the downside. And no ways, never, ain't going to happen. Getting all of that stuff. There's the targets. There's the risk rewards. 51.05 on that short. All you had to do is stand by the trade. You could carry it on and on and on. That Neo trade, down, down, down. Let's have a look at Neo today. There's a little wind up, by the way, on a short time frame, on a 15-minute. This is your trigger time frame. This is this little gift that gives you a tighter squeeze that we're talking about. This is where we go. This is what it means to be part of a community, all doing one thing damn well. Neo to lose 66, posted on the 9th of August, guys. All my stuff is time-stamped. I'm not interested in these people that delete tweets and YouTubes. I've got stuff that's wrong all over there. I've got no time to take it off. It's all good. I learned something from it. It's not part of the game to be right. I'm showing you something that's successful on the Ethereum, and I'm showing you something that's successful on the Neo. But let me tell you, we get them wrong, and it's part of the game. Do you know how much you can continue to be wrong when you land a 51 risk reward? You know how much you can afford to be wrong if you'd picked that Ethereum USD. How many of you watched that live stream either as it happened or within the next 2 days before it properly broke and left for good? It was put in front of you free of charge, a 60, guys. Hello. You'll stop at 211.50, go short at 210, $1.50. By the way, we'll see you downtown in the low 100s. And it won't be long. You're going to climb in the elevator like at the Saudi Al Jarrah building, and you're going to go, whew, the most comfortable, quick journey. You're going to lose your dinner. It's going to spill so fast. And that is the power of real method, real community, and we've designed a system around it. This is not for everybody, but let me tell you, you don't have to get them 100% right 100% of the time when you get the financial mathematics of trading. And this is why I laugh at people that do tweets that say the worst thing is a symmetrical triangle or and all of that. They don't understand volatility. Compression is the financial mathematics of trading that gets a tight risk and a high reward. And let's go have a look at Neo. Where is he today? Because kind of Neo was meant to be the Ethereum of the future. Okay, let's see Neo. How did he do? How did it all turn out? Neo. Did he make it? Where is he today? How did he cope? Same exchange. How did he cope with the great Bitcoin sell-off, which, as I say, while we may see a rally, may not be entirely over? Did he get there? What is Neo trading today? Wow, 9. Little bit of overperformance there. We warned of that in that same video. 9, and it actually touched $8. $8, guys. $8. You're looking at a setup. There she is. That's given you an incredible risk reward. You saw it posted in our setups in our medium. You've got it. You saw it. 50:1. You've got to decide which trades to take. By the way, there's the previous one, which we also took. That one we took, I had to make some decisions on where I was putting my capital. I don't like having more than a certain amount of trades. I wasn't in the whole way of this one because I had to decide which is your best. I don't want 10 trades. We're not portfolio managers. Guys, get this wrong. You are totally correlated. You will, if you're wrong, you're going to be wrong and get kicked in 10 places in the backside. It's much better to reduce your trades to 3 in total, and actually your best 1 or 2. I will often in crypto have only 1 coin or 2 coins on at any one time. Right now I'm only short 2 coins. That's it. That's it. I would take a Ripple BTC again when we start to move. But look at the setups. Look at the setups and how they've performed. And they were drawn for you. They were drawn for you on that platform I showed you, the legacy one. Beautiful call. Made it to the bottom. By the way, going back to the Ethereum trade, I don't know who you're watching. But on this Ethereum trade, we suggested then, when this was first falling a long time ago, in this video, I did go check it. We called the 169 low with repeated drill downs, where is that? The one I want. Give me the one I want. There he goes. The 169 low on Ethereum. That is if you go back up here before it rallied on the major up side. That was some time ago. That was right there. There's the 170. You traded 168. You got out on the 169 low. You took that target. And then you got a wind up. You got a small little segment of a wind up there. We took that, and it kept pushing us a little bit more, a little bit more, a little bit more, and eventually you got all of them. There's the other pattern, and there's the final one, and it got you out right down there. That is accurate. Are there any technical charting guys in the crypto space or elsewhere that are getting you out at 169 when the thing rallies finished at 168? What's the low there? It's almost too close. It's 167 on Bitfinex. Thank God. I actually get nervous if it's too close. 167, it turned. You sold out at the 169s. It was given to you free on YouTube, but you don't value it and you don't understand it. That's why it means nothing. That's why, in a sense, at the risk of, and I'm not trying to provoke anybody, but I'm casting pearls before swine. For the one guy actually says, shit, he did say that, and it did happen. I don't know what the flip he's doing, but maybe I should find out it works for me. This video is for you. All the other guys, all the troll boys from EOS, all the other folk, that's why there's no monetization on these channels. You don't get adverts. You get the opportunity for the right person who understands to join us. You know why? Communities are awesome. It's great having people working, bringing ideas together. It's good for me and it's good for you. And we all get an opportunity to grow and develop. I'm spending time right now with two of my community members downstairs that have done not only my standard trading metamorphosis, but the accelerator. Why did they spend money again for a second time? Why did they keep coming? Because there's something there. Because they're getting something for it and they're saving. They're not getting their face pasted on Bitcoin and altcoins right now and having an entire wedge ripped out of their pockets. And so many people are. And I'm not talking like small money. I'm talking about people that won't find 5-10 grand to educate themselves, but will lose $60,000 in 3 separate events in the crypto markets before reeling away in disgust and saying it's a fixed rigged market. It's all the bankers, the Fed, Roger Ver, Craig Wright. They're all just rigging it. It's the bots. It's the bot patterns. It's the this. Mate, read the charts, get a method and learn. They are all participants in the markets. I traded the Euro Swiss franc short. The central bank was one of the major players. It is just additional footprints in the sand. It's just the big footprints in the sand. But guess what? When they're tired of gobbling up euros, they get fatigued. And that's what it shows you. It's in the inverted setups, and the inverted setups are the best. They fall faster than upside ones go up. Everyone only loves a long only market, and you're not a trader. You're not a trader until you can make money when everyone else is wailing like little babies. That's when you become a trader. If you want to learn, you know what to do. I'm sorry this sounds like a pitch. I'm showing you stuff about Ethereum. It came out there. You saw it right down to 169 from back here. You saw it on Neo. I predicted. I came out and said 2/3 market cap decimation. Guys calling me flipping lunatics. I'm on EOS calling it from 6 to 258. Guys calling me lunatics. You can do it too. It's got nothing to do with me. I am not a guru. I'm applying a method. You can make the same calls yourself. You can do it in our environment. Hey, I think this is going to shit a brick and it's going to be worth half what it was before. I called on equities long before crypto. A 75% decimation of Gulf Sands Petroleum market cap. It happened. Why? Because of quality of pattern. This is the news before the news. The technicals are the participants' activity, and it includes the big informed participants, including the people you hate, like the bankers, the feds, the insiders, and everybody and his flipping dog that are trading in the markets. Anyway, that's my chat. That's Ethereum. By the way, I don't think the bear is over, but you just made a target. It could dribble down again a little bit, base out. It means churn, boring, not so much of the elevator straight to the 2 miles under the earth and you can start mining for diamonds type story. It's going to be a little bit quieter for a bit, but it ain't over. And the guys, the bulk of the technical guys have all called bottoms, and they've all done it way too many times. Anyway, that's it. I'm done. I'm done. What an incredible period in crypto. I just hope some people learn. I'm kind of like feeling collective pain for a lot of people out there, and it didn't need to be that way. It didn't need to be that way. If you're that guy who says, I get what he's on about, I want to make a difference, we'll see you on the 5th for our webinar on the Crypto Sniper. If not, carry on doing what you're doing, but be careful, because you might not take the lesson you're meant to take. Okay, bye for now.